All right, so now we're going to talk about credit scores in our program, Credit Scores 101. Now, if you want to buy a home, your credit score is super important. But what is it? How does it work? Why does it matter? I've heard veterans that VA loans don't need credit scores. Well, to answer the first question, a credit score is often referred to also as a FICO score. And simply put, it's a 3-digit number that represents how likely you are to pay back your debt. So the 3 main credit bureaus out there, well, they calculate this number. And then they group them into sections ranging from like bad credit all the way up to like excellent credit. However, these groupings do not necessarily match how we at Low VA Rates define bad credit all the way up to excellent credit. We might do it just a little bit differently. And this is because VA loans have more flexible credit standards and guidelines like we've talked about in some of our other videos. So if you want to find out what your credit score is, you need to contact one of these 3 credit bureaus. There's TransUnion, there's Experian, there's Equifax. You can also just get a free credit report every year, and the easiest way to do that is to request one through freecreditreport.com. Just go Google free credit report, and you'll find all sorts of companies out there and websites that will pop up, and you are entitled to a free credit report once a year that will have 3 scores on it. Okay, so let's talk about how these credit scores work. There are 5 main areas that are going to impact your overall credit score. Number 1, your payment history, and that makes up about 35% of your overall score. Number 2, the amount that you owe. That's going to make up about 30% of your score. Then number 4, we've got the length of your credit history. So how long have you had credit cards, or have you been making payments on credit that was granted to you? That's going to make up 15% of your overall credit score. Okay, number 5 is your mix of credit usage. Okay, so auto loans, credit cards, student loans. What types of credit or what mix of credit do you have? And that makes up 10%. So 10%. And then finally, new credit. Okay, that's going to make up 10%. Are you getting new credit throughout your life, or did you get some credit cards right after college and you've never applied for new credit? Okay, so when we talk about your payment history, this is the area of your score that looks at whether or not that you're making your payments to your credit cards, to your auto loans, or any other lines of credit you have on time. So if your payment's due on the 1st of the month and you're making it after the 30th, you're going to be reported late, okay? You want to make your payments on time. When we talk about the amount owed, that's where we're focusing on how much of your available credit you're using every month. So if you divide the total amount of your credit used by the total amount of your credit available, you're going to get what we call a credit utilization ratio. You want to keep that at less than 30%. So quick example, if you've got $10,000 in available credit, maybe 2 credit cards at $4,000 a piece, so that's $8,000, and then you've got a motorcycle loan, and that's a $2,000 line of credit. You've got $10,000 of extended credit to you. You don't want to carry large balances on those credit cards, or else you're going to have a high credit utilization ratio, and that's not good. Okay, as far as your credit mix, the best thing to do is have a variety of credit types. So instead of only having all credit cards, it would be better to go out and maybe get a couple credit cards, an auto loan, of course a mortgage, that's what we're here for, student loans. Those sorts of things will help you have a better mix of credit. Now finally, new credit is affected when I say new credit. If you're going to go out and get a bunch of credit cards because your mailbox is full of all these offers, and like me, you like to travel and you've got all these airline miles that you can get by signing up for these new credit cards, that can be risky if you're applying for a bunch of new credit all at once and in a short period of time, because these algorithms that the credit bureaus, these credit reporting companies are looking at, they might think you're in a little bit of a financial problem, or you're going to go out and take on a ton of debt. So don't, especially, let me focus on this, especially when trying to get a loan with Low VA Rates, or anybody else for that matter, don't go apply for new credit once you've started the loan process, or even anytime near when you intend to start the loan process. If you're planning out for the next year, you're watching our video and you're trying to educate yourself, then yes, go out and get some credit and start letting that credit season. So now that we've talked about what types of things can affect your credit score, let's talk about ways that you can improve it. The fastest way, hands down, to improve your credit score is to address areas that are going to have the biggest impact. And that is your payment history and the amount you owe, or that credit utilization ratio. So let's focus on those. For your payment history, you should review your credit report, like I already said, at least once a year and try to find mistakes. This would include things like late payments that you actually made your payment on time, or an account that's on your credit report that's not even yours, okay, but it's listed, okay? It might belong to another person with a very similar name. We see these things happen. So if you find any of these mistakes, you need to submit a dispute to each of the credit bureaus that are listing those mistakes. You might find that Equifax and Experian don't have that incorrect account, but TransUnion does. And so you're only gonna have to dispute with TransUnion. Okay, so the other main way to improve your payment history is by just paying everything on time. So if it's due on the 1st, pay it on the 1st. It's not real hard. But look, life throws stuff at you from time to time. You don't need to get all stressed out. If your credit card payment or your auto payment's due on the 1st and you're not making your payment until the 10th or 11th, you're fine. It's when you become 30 days or more past due that you're gonna destroy your scores. Okay, so some negative things that might be on your report that aren't necessarily mistakes, you can only take time to fix those. So if you've had a legitimate late payment, let's just say in January of 2020, you're just gonna have to let time go on while you focus on what you can, and over time your credit history will improve because you'll have a lot more time since that late payment. Now, if you want to improve your credit utilization ratio, the first thing you should do is pay down all of the debt that you can. Now, don't misunderstand me. I'm not saying pay off to zero and then close your credit cards. Keep those credit cards open, but if you can carry a zero balance or a low balance, especially when you're starting to get into the home buying process, that's super, super smart. Bring that debt, outstanding debt down, keep those credit lines up, okay? Never ever close accounts. We have people that come and say, hey, I got the best news. I paid my Amex down and I called them up and I closed it. That hurts because now you have less available credit and that's gonna hurt overall, so don't do that. Okay, the last thing I wanna talk about is why any of this matters. You know, to begin with, a lot of loan programs do have minimum credit scores. Okay, there's just requirements. For example, if you're below a 640, you're not getting this loan. We've talked many times that here at Low VA Rates, we do not have minimum credit score necessarily. The VA doesn't have that rule, but your credit score will impact your interest rate. It will impact how much it costs you to get your loan. So do not be misled. Just because you won't necessarily be denied due to your credit score alone, you're gonna get a much better deal the better your credit score. So it makes sense, even as veterans, to get those credit scores up. Now, if you want to save money on your home loan, please, you can use this video as a resource to remind you how come your credit scores are important, what you can do to start improving your credit scores. I just want to thank you for watching. I hope all the videos that we're doing on this home buying guide really come in handy for you guys. Next up, we're going to be talking about debt to income ratios. Super important topic.